All right, everyone, ready to dive into the deep end with me. Today, we're tackling auditing, specifically audit strategy and planning. And hey, I know, it might not sound like the most thrilling topic, but trust me, we're going to uncover some hidden gems in here. We're going to turn you into audit pros. Think of this as like your roadmap through the audit jungle, right?
Absolutely.
And to help us navigate, we've got these two awesome PDFs. The first one is like our main guide, breaks down the whole audit strategy and planning thing. And then we got the second one, kind of like our cheat sheet, with some extra insights and Q&A to make sure everything really clicks.
It's actually fascinating stuff when you think about it. This is the foundation of every audit, right? You mess this up, and the whole thing could crumble.
Okay, no pressure then. So our main guide here, it starts off by saying an audit isn't just about checking numbers. It's about expressing an opinion.
Right. And that opinion, it's going to be based on solid evidence. Evidence that we gather through a systematic, well-planned process. That's where audit strategy and planning come in. They're like the blueprint for a thorough and efficient audit minimizes the risk of missing something important so we can actually stand behind our opinion with confidence.
Got it. So just like you wouldn't build a house without a blueprint, right? Same goes for auditing. You need that plan.
Exactly. And just like a blueprint keeps a building from, falling apart, audit strategy and planning, they do the same for our opinion. They make it strong, credible.
Okay, I'm starting to see the light. So let's break this down a bit. Our main PDF, it kicks off with these preliminary engagement activities. Sounds pretty basic, but why are they so important?
Well, think of it like this. Before you start digging for treasure, you got to make sure you're on the right island. Yeah. These preliminary activities, they're all about laying the groundwork for a smooth and successful audit.
Okay, so what's step one on this treasure map?
First, we've got client acceptance and continuance. This is where we decide, do we even want to work with this client? Are they worth our time, Or, if we're already working with them, should we keep going?
So it's not just about taking on any client that knocks on our door.
Nope, not at all. Got to be selective. Consider their integrity, their reputation, the whole shebang. We also need to make sure our team, we've got the right skills, the right experience to handle this particular audit. And of course, there's always the ethics, Got to make sure there's no conflict of interest, nothing that could compromise our independence.
Right, got to stay objective.
Yeah.
So it's got to be a good fit for everyone involved.
Exactly. And a big part of this is talking to the previous auditor, if the client had one, of course. This can give us, insider info, like what was it like working with them, any red flags we should be aware of.
Ooh, juicy gossip. It's like getting the inside scoop before you move into a new apartment, right?
That's a great way to put it.
Okay, so client acceptance and continuance. Check. What's next on our preliminary to-do list?
Compliance with ethical requirements and, of course, independence. These are non-negotiable, the bedrock of auditing.
Right, independence. That's like our superpower, right?
Yeah.
But what does that actually mean in practice?
It means staying objective, totally unbiased, throughout the entire audit. We got to avoid anything at all that could cloud our judgment or make us look like we're not independent.
So no accepting those front row Super Bowl tickets from the client, even if they're really tempting.
Definitely not. Even something small, like a gift or a favor, it can create a problem. It can look bad. The engagement partner, the one in charge of the whole audit, they need to be really careful about this. Got to identify any potential threats to independence and shut them down right away.
Got it. So we've got to maintain that separation, that clear line between us and the client. Not just in reality, but how it looks to others too, right?
Exactly. It's not just about doing the right thing. It's about making sure everyone sees we're doing the right thing.
Okay, independence, check.
Yeah.
So what's the last piece of this preliminary groundwork?
This is where we set the stage for the whole engagement. Establishing the terms of the audit. We got to make sure everyone's on the same page, What's the scope of this thing? What are our responsibilities? Theirs? What are we delivering at the end of all this?
So it's like our audit contract, right?
Yeah.
Make sure there are no surprises later on.
Precisely. We call this the engagement letter. It's all there in black and white, Objectives, the financial reporting framework we're using, the timeline, even the fees, all that fun stuff.
Okay, so we've got our ethical ducks in a row. We've got our contract signed, sealed, delivered. Now we're ready to dive into the real nitty-gritty, right? The actual planning.
You got it. And this is where things get interesting. Our trusty PDF, it breaks this process into two main activities: establishing the overall audit strategy and then developing the audit plan.
Okay, strategy and plan. What's the difference?
Think of it like this. The audit strategy is the big picture. Imagine we're going on a road trip. The strategy is deciding where we're going, what route we're taking, what sites we want to see along the way.
Okay, I like that. So how do we figure out our audit strategy? What's the first step?
First, we got to understand the client. Really get to know them inside and out. What's their business all about? What industry are they in? What do they sell? Who are their big customers? What about their suppliers? And how do they handle their financial reporting?
So we're basically doing our homework, right? Researching the client, their industry, all that. But why is all this so important for coming up with a strategy?
Because the better we understand their business, the better we can spot potential risks, those areas where the financial statements might be off, what we call material misstatements.
Okay, material misstatements. That sounds kind of serious. What exactly are those, and why are they such a big deal?
A material misstatement, it's basically an error, a mistake in the financial statements, or something's missing altogether. And the thing is, these errors, they can be big enough to influence someone's decision, like if an investor's deciding whether to buy stock in the company or not.
So it's not just about making sure the math adds up, right?
Yeah.
It's about making sure the whole picture, the financial story they're telling, is accurate, that it's not misleading anyone.
Exactly. And the more we know about their business, their industry, the better we are at anticipating where these potential misstatements might be hiding.
Let's be a financial detective.
Yeah.
Right. Looking for those clues, those telltale signs that something might be off.
Love that analogy. So once we have a handle on their business, what makes them tick and what risks might be lurking, we can start thinking about our approach. Okay, what areas do we need to focus on? How much testing are we going to do? What kind of resources are we going to need for this thing?
So we're taking that big picture view, that roadmap, and starting to flesh it out a bit, right? Turning it into a plan of attack.
You got it. And another big part of the strategy is figuring out the scope of the audit. What are the rules of the game? Which financial reporting framework are they using? Any specific regulations for their industry? And what time period are we looking at?
Okay, so we're setting the boundaries, making sure we're covering all the necessary bases.
Right. And this is important. We got to pinpoint those significant areas, the ones that need extra attention, those areas where there's a higher risk of material misstatements, those juicy spots where things could really go wrong.
Got it. So it's all about prioritizing, right? Focusing our energy where it matters most.
That's it. Now, there's another nugget in our PDF here. It talks about leveraging knowledge from previous audits and similar engagements. So we're talking about learning from the past, right?
Yeah, I guess so. We're talking about our past mistakes.
Mistakes, but also successes, right? If we've audited this client before, well, we can use that experience to our advantage. What were their patterns? Were there any recurring issues? Any areas that were particularly weak last time? And even if it's a brand new client, we can still draw on our experience from similar businesses.
So it's like having a cheat sheet for the audit exam, right? Using all that accumulated wisdom. So we've got the client's business figured out. We've identified the risks. We've set the scope. We're tapping into our past experiences. Anything else we got to think about for our overall strategy?
One more piece to the puzzle. We got to figure out our resources. How big is our team going to be? Who needs to be on it? How much time are we going to spend on this? What's our budget? And do we need any specialists, experts in specific areas?
Okay, so we're assembling our A team. Gotcha. So our strategy is all set. What's next?
Time for the nitty-gritty. We're going to develop the audit plan. This is where we take that big picture strategy, all those grand ideas, and turn them into an action plan.
Okay, so if the audit strategy is our roadmap, the audit plan is our turn-by-turn directions.
Precisely. The audit plan outlines the nitty-gritty details. What procedures are we going to use to gather evidence? When are we going to do it? And how much testing is actually needed? It's like, we've got our battle plan. Now we're assigning specific tasks to each soldier.
I see the connection. So how do we go about creating this detailed audit plan?
Well, we start by describing the risk assessment procedures we're going to use.
Hold on a second. Risk assessment procedures. Are those different from the actual audit procedures?
You're sharp. Yes, they're a bit different. Think of them as the groundwork, the intel gathering. Risk assessment procedures, they're all about understanding the client's world, their environment, their internal controls, all that good stuff. Helps us figure out where those risks of material misstatements might be hiding.
Ah, I see. It's like doing reconnaissance before the big battle. We're scooping out the terrain, identifying potential threats.
Exactly. And these procedures can involve a lot of things. Talking to management, analyzing their data, just observing how they do things, and inspecting their documents.
Okay, so give me an example. What would a risk assessment procedure look like in real life?
Okay, let's say we're auditing a company that makes, I don't know, let's say furniture. And we think their inventory valuation, that might be a risky area. So what do? We talk to the warehouse manager, find out how they control their inventory. We might even watch them do their inventory count, see how they do it. And then we might compare their inventory turnover rate to other furniture companies.
So we're gathering information from different angles to get a complete picture of their inventory situation.
Exactly. And what we learn from all this, it's going to inform the next step in our plan.
Which is?
Now we get into the details. We're going to detail further audit procedures at the assertion level. And this is based on all those risks we just assessed.
Okay, you lost me a bit there. What are assertion level procedures and how do they tie into risk assessment?
Okay, so remember, management, they're making certain claims about the financial statements. These are called assertions. For example, when they tell us how much inventory they have, they're asserting that it actually exists, that they own it, and that it's valued correctly.
Right, they're saying their numbers are accurate, basically.
Exactly. And our job is to test those assertions, to see if they hold up.
Yeah.
Assertion-level procedures, they're the tools we use to do that. We're looking for evidence to either support what they're saying or contradict it.
So if they say they have $1 million worth of sofas sitting in their warehouse,
Right.
we're going to go count those sofas, make sure they're actually there, and that they're not all ripped and torn, right?
That's the idea. We might also trace those sofas back to the purchase orders, the invoices, make sure they actually paid for them and that they really own them.
Okay, now I see the connection. Risk assessment helps us figure out where those assertions might be shaky, and then the assertion level procedures, those are the tests we run to see if they hold up.
Exactly. And remember, the higher the risk, the stronger the evidence needs to be. If we think there's a high chance of something being wrong, well, we got to dig deeper, get more proof.
Makes sense? Higher risk, higher scrutiny.
You got it. Now, the final step in this audit plan is to outline any other procedures we need to do. This is all about making sure we're following the rules, the auditing standards.
So it's like dotting our I's and crossing our T's, making sure everything is buttoned up tight.
Exactly. And just like the overall strategy, this audit plan, it's not set in stone. Things change, we get new information, the client throws us a curveball, we got to be flexible, adjust our plan as we go.
So it's not just a static document, it's more like a living, breathing thing, right?
Yeah, that's a great way to put it. And trust me, that's what keeps things interesting in the audit world.
Okay, so we've got our strategy, our detailed plan. We're ready to roll up our sleeves and get to work, right?
Almost. But there's one more thing we need to talk about. It's called the audit program.
Hold on, a program. We've got a strategy, a plan. Now we need a program too. What's that all about?
Think of it as the instruction manual for our audit. It takes that audit plan and breaks it down into bite-sized pieces, step-by-step instructions for everything we need to do.
So if the audit plan is our recipe, the audit program is like the detailed instructions on how to cook that dish.
Exactly. It tells us exactly what to do, how to do it, and what evidence we need to gather to back up our conclusions. No room for guesswork here.
Sounds pretty detailed, but doesn't that make the whole audit feel kind of, I don't know, robotic? Like we're just blindly following a checklist.
That's a valid point, and it's something we got to be mindful of. The audit program, it's a tool, right? It's not a replacement for our brains. We still got to think critically, use our judgment, our skepticism, all that good stuff.
So it's like a GPS, right? It can guide us, but we still got to be aware of our surroundings, make adjustments if needed.
Perfect analogy. The program provides the framework, but we're the ones driving the car.
Okay, I'm seeing the balance here. Structure and flexibility, both important. So what does a typical audit program look like? Is there like a standard one we can all use?
Well, here's the thing. There's no such thing as a one-size-fits-all audit program. Every audit is different, right? Different client, different business, different industry, different risks. We got to tailor our program to each specific situation.
Okay, so it's like a custom-made suit, perfectly fitted to the client. I get it. But can you give me an example?
Sure. Let's say we're auditing a company that, I don't know, sells paint, all right? And one of our audit team members, let's call him Rohit, he's been assigned to look at their sales transactions. So his audit program, it's going to include things like checking invoices, comparing prices to their price lists, verifying all the entries in their customer accounts, and making sure those invoices match up with the e-way bills, those electronic documents that track the movement of goods.
Okay, sounds pretty standard so far.
But here's where things get interesting. Rohit's going through these e-way bills, and he notices something weird. A lot of them were canceled, like within a day of being created, and it all happened in March, the last month of their financial year. Now, the audit program, it didn't specifically say to look for this, but something just seemed off to Rohit.
Ooh, a potential red flag. What did he do?
He did exactly what a good auditor should do. He didn't just ignore it, even though it wasn't on his checklist. He used his professional skepticism, dug a little deeper, tried to figure out why those e-way bills were canceled, and guess what he found?
What? Tell me.
The company, they were trying to make their sales look better than they actually were. They were creating fake invoices and e-way bills right before the year ended just to inflate their numbers.
Wow, sneaky. So Rohit, by going off script a bit, he might just uncovered a major case of accounting fraud.
Exactly. And that's the key takeaway here. Don't be afraid to deviate from the program if something seems fishy. Always trust your instincts.
Got it. Always be on the lookout. So we've talked about the strategy, the plan, the program. What's next?
Now we move on to another crucial aspect of auditing. Documentation.
Documentation.
Yeah.
You mean after all that planning, all those detailed instructions, we still have to document everything?
You bet. Think of it as the paper trail of our audit. Right. Everything we do, every decision, every piece of evidence, it all needs to be documented. And trust me, this is super important.
Okay, I'm sensing another story coming. Why is documentation so crucial in the audit world?
Well, for starters, it's all about quality control. We need to make sure that the audit, it's done right, consistently, thoroughly, and by the book, and documentation helps us do that. It allows senior auditors, quality control folks to check our work, make sure we did everything properly.
So it's like a built-in quality check, right? Making sure everyone's on the same page.
Exactly. And then there's accountability. Who did what? When? What conclusions did they reach? It's all there in the documentation. This helps us identify any weaknesses in the audit process and ensures everyone's responsible for their work.
Right, so no more finger pointing. But you mentioned something earlier about covering your backside. Isn't that a bit, cynical? Shouldn't we be focused on doing a good audit, not just protecting ourselves?
You're right, of course. A high-quality audit, that's always the priority. But let's face it, we live in a world where people sue, right? And auditors, we can be held accountable for our work. Proper documentation, it's like our safety net. It protects us if someone ever questions our work.
Okay, that makes sense. It's like wearing a seatbelt, right? You hope you never need it, but it's there just in case.
Exactly. So when it comes to planning the audit, what are the big things we need to document?
Let's get specific. What are the must-haves for our audit documentation?
First things first, we got to document that overall audit strategy, that big picture plan, and then the detailed audit plan too. And if we make any big changes to either of those documents along the way, well, that needs to be documented as well. And not just what we changed, but why we changed it.
So we're telling the story of the audit, right? Providing context, showing our thought process.
Precisely. And remember, clear and concise is key. No need for novels here, just the facts, clearly and simply presented.
No secret audit code words.
Exactly. Now, to make this whole documentation thing a bit easier, we can use these standard audit programs, these checklists, as a starting point. They give us a basic framework to work with.
Ah, so it's like a template, right? But do we have to follow these programs word for word?
Nope, not at all. Every audit is unique, remember? We got to tailor those programs to fit the specific client, the specific situation. We might need to add some procedures, delete others, change how much testing we do. It all depends on the client's business and what risks we've identified.
Okay, so it's about using the template as a foundation, but customizing it to fit the situation.
You got it. And remember, documentation, it's not a one-time thing. It's an ongoing process. We need to keep updating it as the audit progresses.
All right, so we need to be diligent about keeping our documentation up to date. What if we uncover new information, as we're going along? Or we hit a snag, we got to change our approach.
Document it. Every twist and turn, every detour, every new discovery, it all goes in the documentation.
So we're basically keeping a detailed audit diary, right? Chronicling our adventures through the financial statements.
Exactly. Now, let me give you a real-world example of why this is so important. Imagine a small accounting firm, we'll call it Carr and Associates. They've just landed their first big audit client, a company that makes car parts.
Wow, a first-time audit. Exciting and a little nerve-wracking.
You bet. So the owner of the firm, this sharp CA named Simran Carr, She's doing her homework before she even accepts the engagement, checking the company's background, making sure her team can handle it, considering all the factors, the deadlines, everything.
Well, she's not messing around.
Nope, she's a pro. And she's already thinking about those risk assessment procedures. She wants to talk to key employees, the ones who handle purchasing and marketing, really get a feel for how they operate. And she's even planning to visit a few of their factories, see the manufacturing process in action.
So she's not just relying on paperwork. She's getting out there getting her hands dirty.
Exactly. That's proactive auditing right there. Now, her team, they've put together a really detailed set of instructions for the audit, all those procedures they need to follow. But here's the thing. They missed something.
Uh-oh. What did they forget?
Well, during the audit, they find out that this car parts company, they also produce a lot of scrap material. But their original instructions, they didn't say anything about how to audit that scrap material.
Oops. That sounds like a pretty big oversight.
It is. And it just goes to show you can't plan for everything. So what should Simran and her team do?
Well, they can't just ignore it. They got to acknowledge it, right?
Right.
Document it. But what's the best course of action here? Should they change their original instructions?
That's exactly what they need to do. They got to revise their audit program, add specific procedures for auditing that scrap material, figure out how much scrap there is, how much it's worth, how they're accounting for it, all that good stuff.
So they're adapting, right? Adjusting their approach based on new information. That's what we were talking about earlier, that flexibility.
Exactly. And they got to document this change too, explain why they're doing it, shows that they're thorough, they're on top of things.
Okay, so this example, it really highlights how documentation, it's not just about blindly following a checklist. It's about creating a record of the whole audit journey, showing how we thought things through, how we adapted, how we used our professional judgment.
You got it. Now, let's take a deep breath, step back for a second. We've covered a lot of ground. Let's recap, shall we?
Yeah, it feels like we've already hiked halfway through this audit jungle.
We have. We started with those preliminary steps, right? Making sure we've got the right client, we're ethically in the clear, and we've got a clear agreement in place.
Right, the foundation for a smooth and ethical audit.
Exactly. Then we dove into the heart of audit planning, the overall strategy, the detailed plan, all that good stuff.
And we learned about those risk assessment procedures, how to tailor our approach to each client's specific risks.
We even tackled the audit program, talked about the balance between structure and flexibility.
And we can't forget about documentation, the auditor's best friend.
Absolutely.
Okay, ready for the next leg of our journey?
Bring it on. Welcome back. We're still deep in the audit jungle here. We were just talking about documentation, right? Super important stuff. But now, let's switch gears for a sec. I want to walk you through a scenario, bring all this together, the strategy, the plan, the program, all of it. So imagine this. We're auditing a tech startup. They're developing this cutting-edge AI software.
Ooh, AI. That's all the rage these days. But how does that change things for us auditors? I mean, does it affect how we approach the audit?
Oh, yeah, big time. It affects everything. Starts with our strategy, right? We got to think about the risks involved in a fast-paced industry like tech, with AI and all that. Things change so quickly, it can be hard to keep up.
Right. So valuing their technology, figuring out what it's worth, that's got to be tricky. And what about their future revenue? Who knows what's going to happen with AI, right?
Exactly. It's all about uncertainty. So our strategy, it's got to be flexible, ready to adapt. We can't just stick to some rigid one-size-fits-all approach. Got to be agile, just like the industry itself.
I like that. So we're basically future-proofing our audit and anticipating those curveballs that the tech world loves to throw at us.
You got it. And this whole adaptability thing, it flows through everything. Our plan, our program, all of it. We might need to spend more time understanding their technology, really getting into the weeds of their AI projects. And we might even need to bring in some specialists, people who really understand AI to help us figure out what all this intellectual property is actually worth.
So we're assembling our team of audit superheroes, but we're also bringing in some tech wizards to help us out.
Makes sense. Now, let's say we're going through the audit and we start to get this feeling that the company, they're a little too optimistic. Maybe they're overly confident about their AI development timeline or how quickly people are going to adopt their software. What do we do?
Sounds like a red flag to me. Do we stick to our original plan or do we got to make some changes?
That's where that adaptability comes in. We've got to go back to our risk assessment, maybe expand our testing in some areas, especially revenue recognition and going concern. We might need to do some extra digging, gather more evidence about how their AI development is really going, who their competitors are, and what the regulations look like in the AI world.
So we're basically adjusting our course, right? Like we're sailing a ship and we see a storm brewing, so we got to change direction a bit.
Exactly. And every time we make a change, got to document it. Why did we do it? What new information did we get? This keeps everything transparent and accountable.
Okay, so this example really shows that audit planning, it's not just a one-time thing, it's an ongoing process.
Absolutely. It's dynamic, it's iterative, and it keeps us on our toes, that's for sure. Now, ready to dive into another essential part of auditing. It's all about audit evidence.
Ooh, evidence. Time to put on our detective hats. But before we start gathering clues, remind me, what exactly is audit evidence and why is it so important?
It's simple. Audit evidence, it's the information we use to form our opinion. Is the financial statement fair or not? That's the big question. And the evidence, it's our answer. It's the foundation of everything. Without enough solid evidence, well, we can't really say anything for sure.
Okay, so it's like building a case, right?
Yeah,
We need those pieces of evidence to put the puzzle together and see the whole picture.
exactly. But just like a good detective, we got to be careful, discerning. Not all evidence is created equal, right?
Right. Some evidence is more reliable than others. So what makes evidence strong, persuasive?
Several things, actually. First, we got to consider the source. Where do we get this information? Is it from outside the company, something like a bank statement or a confirmation from a customer? Or did we get it from the client's own records?
Okay, I get it. Outside sources, those are usually more reliable, right?
Yeah.
Less chance of the client cooking the books, so to speak.
You got it. And then we got to consider the nature of the evidence. Is it something we can actually hold in our hands, like a document, an invoice, a contract? Or is it more about observation, like watching their inventory count or seeing how they handle cash? Or maybe it's what people tell us, their responses to our questions.
So we're looking for tangible proof, not just hearsay,
Yeah.
right? We want to see it with our own eyes, if possible.
Exactly. And of course, the evidence has got to be relevant. It's got to relate to what we're testing. Like if we're checking if they really have the inventory they claim they have, well, going and counting that inventory, that's relevant. Looking at their sales invoices, not so much.
Right. Got to make sure the evidence actually answers the question we're asking.
And last but not least, we got to have enough evidence. Is it sufficient to support our opinion? And how much is enough? Well, that depends on the risk. If we think there's a high chance of something being wrong, we're going to need more evidence to back up our conclusion.
So it's all about finding that sweet spot, right? Enough evidence to be confident, but not so much that we're drowning in paperwork.
Exactly. Now, remember that audit program we talked about? It plays a big role here. It tells us what procedures to perform, and those procedures, they dictate what kind of evidence we're going to collect.
So the program sets the stage, the procedures are the actions we take, and the evidence, that's the result of those actions. Like, if we're baking a cake, the program is the recipe, the procedures are the steps, and the evidence is the delicious cake we end up with.
Love the analogy. So, for example, if our program tells us to confirm those accounts receivable balances with the customers, well, the evidence we get back from those customers, that's what we use to support that balance on the client's books.
Okay, it all connects. We got to document all this evidence too, right?
Absolutely. Where did we get it? How did we get it? And what does it tell us? Got to write it all down, clear as day.
So back to that evidence chain, right? Each piece linked to the next, all leading back to our overall conclusion.
You got it. Now, you might be wondering, what are the tools of the trade? What do auditors actually do to gather all this evidence?
Yeah, spill the secrets. What's in the auditor's toolbox?
Well, one of the most basic fundamental techniques is inspection. We look at their records, their documents, could be invoices, contracts, bank statements, minutes from their meetings, even their internal policies, how they do things.
So we're basically rummaging through their files, digital or paper, looking for those nuggets of truth.
That's the idea. Anything that supports or contradicts what management is telling us.
Okay, but what if we need more than just paperwork? What if we want to see the real deal?
Then we get physical. We go and inspect their tangible assets. What do they have? What condition is it in? Is it really theirs? Maybe we count their inventory, watch them make their products, or check out their big, fancy equipment.
So we're not just stuck in the office all day. We get to go out into the field, see things for ourselves.
You bet. Seeing is believing, right? And sometimes watching how they do things, it can tell us even more than their records. Like if their inventory count is a total mess, that's a red flag, right?
Okay, so observation, it's about picking up on those subtle clues, things you wouldn't necessarily see in a spreadsheet.
Exactly. Then there's good old-fashioned inquiry. We talk to people. Management, employees, even outsiders, like their bankers or customers. We ask questions, lots of questions.
So we're basically conducting our own little audit interviews, getting the inside scoop straight from the source.
Precisely.
Yeah.
But it's not just about asking, it's about asking the right questions.
Yeah.
And listening, really listening to what they're saying, reading between the lines.
Yeah, got to be a good listener, a good observer, and a little bit of a mind reader.
You got it. Now, sometimes we need to go outside the company, get independent verification. That's where confirmations come in. We send out these requests to banks, customers, suppliers, basically asking them to confirm certain information.
So it's like getting a second opinion, right? Making sure what the client is telling us actually checks out.
Exactly. Confirmations, they can provide really strong evidence. Like, if a customer confirms their outstanding balance, well, that gives us more confidence in the accounts receivable balance on the client's books.
Okay, confirmations are all about getting that external validation. What else do we have in our arsenal?
Analytical procedures. This is where we put on our data analyst hats. We look at their numbers, both financial and non-financial, and we look for patterns, trends, anything that seems out of whack.
So we're basically data detectives, looking for those clues, those anomalies that might point to a problem.
You got it. And we can use these analytical procedures throughout the audit, from the very beginning when we're planning to the very end when we're testing specific balances and transactions.
Okay, so analytical procedures, they're like our secret weapon.
Now, just a reminder, all these techniques, the amount of evidence we gather, it all depends on the risk. Higher risk, more evidence needed.
Got it. Tailor our approach to each client. So we gather all this evidence. What do we do with it? Just pile it up in a corner?
Nope. Gotta document it. Remember that audit trail. Every piece of evidence. Gotta record where it came from, how we got it, and what it tells us.
Right. So back to documentation again. We're building that evidence chain one link at a time.
Precisely. Now, I know this might all seem a bit overwhelming, especially for those just starting out in auditing. So any common mistakes that CA Inter students tend to make when it comes to planning and evidence?
Actually, yeah. When I first started learning about auditing, it just felt like so much information, so many rules, I didn't even know where to begin.
That's totally understandable. One common mistake, students try to memorize everything instead of really understanding it.
So it's not about cramming, it's about actually getting it right, the why behind the what.
Exactly. Auditing is about thinking. Why are we doing this? What does this evidence tell us? How does it all fit together? Got to be able to connect the dots.
Okay, so understanding the big picture, the logic behind it all, that's crucial. What about actually creating the plan, the program? Any tips there?
One thing that really helps, break it down into smaller pieces. Don't try to do everything at once. Focus on one area at a time, plan it out, document it, then move on to the next.
So divide and conquer, right? Make it less overwhelming.
You got it. Another tip, use a template. Lots of accounting firms, professional organizations, they have these pre-made templates for audit plans and programs. Saves you a ton of time and make sure you're not forgetting anything important.
Ah, so it's like having a cheat sheet, but for auditing. But we talked about customization, right? So how do we balance using a template with tailoring it to each client?
Great question. The template is a starting point, a framework. But you got to use your judgment, adapt it to the specific risks and circumstances of the client's business. Don't be afraid to deviate from the template if it doesn't make sense.
Okay, so use the template as a guide, but be ready to go off-roading if needed.
Exactly. And one more thing. Document, document, document. It's your best friend, remember. Got to tell that clear, concise story. Show your thought process, how you reach your conclusions.
No cryptic audit code words allowed.
And don't be afraid to ask for help. If you're stuck, confused, not sure what to do, talk to a senior auditor, a mentor, or someone with experience. They've been there, done that. They can guide you.
So basically, find your audit Yoda.
Exactly. Oh, and one last thing I almost forgot. Never, ever underestimate the power of professional skepticism.
Skepticism? You mean like being a bit suspicious?
It's more than just suspicion. It's about having a questioning mind. Don't just take everything at face value. Dig deeper. Challenge assumptions. Ask tough questions.
So we're like investigative journalists, right?
Yeah.
Always digging for the truth, no matter how deep it's buried.
Exactly. That's what makes a good auditor. Always questioning, always searching for the real story behind the numbers.
Wow. I feel like I've learned so much. But before we wrap things up, is there anything else we need to cover? Any loose ends we got to tie up? Okay, so we've explored all the essential ingredients for a successful audit, right? From the initial groundwork to risk assessment, those detailed audit programs, and all those evidence-gathering techniques. But before we wrap up, I want to get practical for a sec. What are some common traps we CA Inter students fall into? What are those best practices that can make our audit lives a little easier?
Great question. Knowing what not to do and what to focus on can make a world of difference when you're starting out in auditing.
For sure. I remember when I first started studying auditing, it felt like information overload. No many rules, so many procedures. I was drowning in checklists.
That's a common feeling, yeah. And one of the biggest mistakes I see is students trying to memorize everything instead of really understanding the concepts.
So it's not about cramming all those rules into our brains. It's about getting the logic, the why behind it all.
Exactly. Auditing, it's not just about following a set of instructions. You got to think critically. Understand why we do what we do. Why are we gathering this evidence? What does it tell us? How does it all connect to our opinion?
Okay, so understanding the big picture, the reasoning behind it all, that's key. But what about the actual planning process? Any practical tips for creating those audit plans and programs?
Absolutely. One thing that can really help, break it down. Don't try to plan the entire audit in one go. Focus on one area at a time, plan it out, document it, then move on to the next.
So like baby steps, right?
Yeah.
Makes it less overwhelming.
You got it. And don't be afraid to use those templates we talked about, those pre-made audit plans and programs. A lot of accounting firms and organizations, they have them. It's a great starting point, saves you time, and make sure you're not missing anything crucial.
Right, those templates can be super helpful.
Yeah.
But we also talk about customizing them, right?
Yeah.
So how do we find that balance? Using the template, but also making it our own.
Well, the template is a guide, a framework. But you got to use your professional judgment, adapt it to each specific client, their business, their risks, their industry, all those things matter.
So it's like using a map to navigate, but we got to be prepared to take a detour if we see a roadblock or a more scenic route.
Yeah, exactly. Every audit is a unique adventure.
Love that. Okay, so flexibility and customization are key. What else should we keep in mind?
Documentation. Can't stress this enough. It's your best friend in the audit world. It's your proof, your defense, your story. Keep it clear, concise, easy to understand.
No need for those audit novels.
Exactly. And don't be shy about asking for help. If you're stuck, confused, not sure what to do, ask a senior auditor, a mentor, someone who's been there, done that.
Find your audit Yoda, right?
Precisely. Oh, and one last thing, and this is important. Never, ever let go of your professional skepticism.
You mean like being a bit suspicious? Not just believing everything the client tells us?
It's more than just suspicion. It's about having a questioning mind. Challenge assumptions. Dig deeper. Look for evidence to support what you're being told. Don't just take things at face value.
So we're like those detectives on TV, right?
Yeah.
Always asking those tough questions, looking for those hidden clues.
That's the spirit. Our job is to uncover the truth, the real story behind the numbers. And that takes a healthy dose of skepticism.
Wow, that's powerful. I feel like I could conquer any audit now. So before we sign off, any final thoughts you want to leave our listeners with?
Audit strategy and planning, it's the foundation of everything. It's what sets us up for success. It's dynamic, it's challenging, it's constantly evolving. But when you master these skills, you're not just checking boxes. You're ensuring that companies are playing by the rules, that their financial information is accurate and transparent. You're making a real difference.
That's a great way to put it. And that wraps up our deep dive into the world of audit strategy and planning. We've covered a lot of ground.
We have. And hopefully we've demystified some of those textbook concepts and made auditing feel a little less daunting, a little more exciting.
For sure. So to all our fellow CA Inter students out there, keep those questions coming, stay curious, and never stop learning. And remember, you're not alone on this journey. We're all in this together. Thanks for joining us on the